All right, let's dive into Cango Inc. Man, their latest earnings call was a wild one. We're talking about a company that's completely reinventing itself. And the numbers? Super confusing. Management's talking a big game about the future, but the market? Well, the market had a very different opinion. So let's break it all down. So here's what we're going to do. First, we'll tackle those headline numbers that have everyone scratching their heads. Then, we've got to talk about their new Bitcoin mining operation, because that's what's really driving things right now. From there, we'll get into their huge pivot to AI, check out why the market basically slammed the brakes on the stock, and then I'll give you our take, the next call, on where this thing is headed.
Okay, so first up, Congo's really confusing quarter. I mean, when you just look at the big numbers, it feels like you're reading about two totally different companies.
And this is the heart of the problem right here. You look at one side, their earnings per share, a positive 19 cents. The street was expecting a 20-cent loss. That's not just a beat, that is an absolute home run. But then, you glance over at revenue. Woof, they brought in about $225 million when the estimate was over $1 billion, a billion. So what gives? How on earth do you beat on earnings by that much while missing revenue so spectacularly?
Well, the answer is that Congo isn't the company it was a year ago. Not even close. To get these numbers, you have to understand their new business engine. See, all those old analyst models, they were built for an auto trading company. But Congo went all in, I mean aggressively all in, on becoming a global Bitcoin miner.
And look at this. This really puts that transformation into perspective. In the third quarter, a whopping 98% of their revenue, 98%, came from mining Bitcoin. That old auto business, it's basically a rounding error now, just 2%. And that is why all those revenue models were completely blown out of the water. It's the absolute key to understanding what's going on here.
And on paper, this new model is firing on all cylinders. I mean, look at these operational stats. They mined over 1,900 Bitcoin. That's up more than 37% from just last quarter. They've got 50 exahash of power humming along at over 90% efficiency. And the profitability? It's just a night and day difference. Adjusted EBITDA went from a measly $1 million last year to $80 million this quarter. That is a massive, massive swing.
But, and you knew there had to be a but, right? This is a big one. Their all-in cost, everything included, to mine just one Bitcoin in Q3 was almost $100,000. Let that sink in, nearly $100,000. So yeah, they're mining a ton of Bitcoin, and yeah, they're showing these paper profits, but their cost structure is just sky high. It means they are completely at the mercy of a very, very high Bitcoin price to make any real money.
Now, management isn't blind to this. They know that cost is a huge vulnerability, and that's where their next big story comes in, the pivot to AI. On the earnings call, they spent a lot of time framing this whole Bitcoin thing as just a stepping stone, a launch pad for their real long-term ambition, which is all about artificial intelligence. Yeah, they used this exact phrase on the call, from Bitcoin mining to energy access and from operational depth to AI compute deployment. The whole idea, the whole pitch, is to take the cash and the know-how from mining and pour it into building something much bigger and, frankly, more stable, an energy and AI compute business. And they didn't just talk about it in vague terms. They laid out a pretty clear 3-phase roadmap. So phase 1, the near-term stuff, start leasing out GPU compute power to AI startups. Okay, makes sense. Then phase 2, the medium term, start building out their own regional AI data centers. And then the grand finale, the long-term vision, become a massive global AI compute grid running on green energy. Think of it like a new kind of utility company for the AI age. And to be fair, they are putting some muscle behind this vision. It's not just talk. They've got clean energy pilots going in Oman and Indonesia. They bought a 50-megawatt facility right here in Georgia in the US, and they made the move to a direct listing on the New York Stock Exchange, which they say is all about being more transparent with us, with investors. Okay, so let's recap. You've got this massive beat on earnings. You've got this super ambitious, forward-looking AI story. The stock must have gone to the moon, right? Well, wrong. Which brings us to the market's reaction, which was, let's just say, deeply skeptical. The reaction wasn't just negative, it was fast. The stock was sitting at $1.45 before the earnings dropped. The very next day, after everyone had a chance to chew on the numbers in that big AI pitch, it closed at $1.31. That's a drop of almost 10% in a single day. Ouch. And this slide right here, this is the whole story. It's about two completely different narratives.
On one side, you have management's pitch. We are an early-stage AI infrastructure platform. On the other, you have the market's reality. No, you're a high-cost, risky Bitcoin miner. Management says, our mining business is just funding our amazing future. The market says, your mining business is fragile, and those earnings aren't real. Management dreams of this incredible AI roadmap. The market just sees a ton of risk in actually pulling it off.
So it all comes down to this, right? What is driving all this skepticism? Why is the market just completely ignoring that huge earnings beat and focusing only on the bad stuff?
Well, it looks like investors have a checklist of concerns, and it's a pretty long one. First off, that cost to mine a Bitcoin, nearly 100 grand, that just screams unsustainable. Second, the AI plan. It sounds great, but it's totally unproven and it's going to cost a fortune to build. Third, you look at the balance sheet and it's messy. You've got these huge receivables from related parties, a lot of debt. It raises some red flags about the company's financial health. And of course, the elephant in the room. Bitcoin's price has been shaky lately, and that's a huge problem when it's your only real source of revenue.
Okay, so we've seen the good, the bad, and the confusing. Where does that leave us as investors? Let's get to the final piece of the puzzle, the next call. This is our take on what happens next. The big question is, what should you be looking for from Cango over the next 3 months? And more importantly, what's the stock likely to do between now and then?
All right, here it is, the next call. First, on the results next quarter. We think you're going to see continued pressure on their margins. That super high mining cost isn't going away anytime soon, and if Bitcoin stays volatile, it's going to hurt them, plain and simple. As for the stock price, we expect it to keep getting cheaper. The market has spoken loud and clear. It's in show-me mode. The AI story is great, but until Cango delivers some real, tangible proof, investors are not going to pay for it. So for all those reasons, our rating on Cango for the next quarter is underperform.
And remember, this is not financial advice.